Good morning, Melonheads. Today is Thursday, March 9th, 2023. I hope you all are having a wonderful morning. We got ourselves what could be the early innings of a banking crisis going on. Well, isn't that nice? Happy Banking Crisis Day, everybody. The big story broke last night, just after market close. It was around 4:30 p.m. Eastern Time. Silvergate Bank dropped the news that they are liquidating and ceasing operations. You may recall it was just a few days ago that Silvergate put out a press release that we had talked about on this channel, that it was very alarming, that they had mentioned that they were delaying their annual report. Put a pin in that. We'll be right back to that little soundbite. And that they were worried about the bank as a going concern. Anytime you see going concern, that means, hey, we might not be alive this time next year. Well, last night we got the answer. Silvergate, they're liquidating. They are going out of business. Now, I want to be careful with my language here. The bank has not failed. All right. Supposedly they will be able to make all of their depositors whole. So I don't want to be accused of fudding or anything here, but they are shutting down. They're liquidating. They're selling their assets. Now, Bitcoin is down rather sharply on that news. The question is, can Silvergate liquidate their assets and pay back their customers without crashing the value of those assets to the point where, well, now they can't make their customers whole? So that's the question around Silvergate. The next question is going to be contagion. What outfits, if, say, they do sell all their assets and they crash the value of them, what other institutions might be impacted by that? We don't know yet. All right, that's Silvergate. That's one big one that's going on. Then the next big one we have is SVB, or Silicon Valley Bank. Their stock was down about 30% the last time I looked, because they are doing a massive capital raise. They are diluting their stock. They're raising billions of dollars. Why? Because their bank is in trouble. Now, SVB Financial, keep an eye on them. They had, as of the end of 2020, somewhere around $200 billion in assets over at that bank. So a big capital raise going on over at SVB. And keep in mind, they specialize in lending to tech startups and a lot of companies that are very vulnerable to interest rates. Well, those companies are drawing down their deposits as they're burning through cash right now, and cash becomes more expensive to borrow. So SVB is showing signs of stress. That's another one. And of course, we've got Credit Suisse is still in the news. Story just broke last night. This morning, Credit Suisse has delayed their annual report. That sounds familiar, vaguely familiar. The Silvergate thing. Anyone remember from like 20 seconds ago? Well, they're delaying their annual report after they got some questions about previous filings from the SEC. All right, so again, none of these banks have failed, but all of these banks are distressed. All right, there are bad things happening at these banks. We need to pay attention. And the question is, if things do get worse, who is next? I got my eye on you, Signature Bank. Keep an eye on them. They had a lot of exposure to cryptocurrencies. And with that, let's shrink my big melon of a head and see what's going on in the markets. And you know what? We've got distress in all of these big banks. Sure. Buy that dip, everybody. Why not? Why not send stocks higher? We've got major trouble at 3 different banks all on the same day, and the S&P is up 8 points or 0.2%. Sure, why not? Very importantly, want to zoom in here. The S&P gave up its 50-day moving average yesterday, closed below that, but we're still just kind of right above that right now. Not sure where it wants to go from there. The Dow Jones is up 131 points. What? Or 0.4% this morning. Okay, buy that dip, everybody. Why not? I am not buying the dip. And the NASDAQ, the NASDAQ chart does not want to load right now. That's interesting. All right. So we're going to put the NASDAQ chart away on investing. Okay, great. This is a great time for my internet to act up. Thanks a lot. Thanks for nothing, interwebs. NASDAQ is up 26 points or 0.22% this morning. All right, the U.S. dollar currently down about 37 basis points or 0.35% at 105.29. Not a lot happening in the dollar today. Looking over at the bond market, looks like we've got mixed things happening in bonds. We got the 1-month Treasury is at 4.65, down about 3 basis points. The 10-year was up a few, but currently basically flat at 3.96. Now, we are still struggling to retake that 4% mark. I'm just going to go ahead and put a line here at 4% because we cannot seem to get above that. Keep an eye on that level, folks. If we break above that back test and pass that back test and move higher, I think the 10-year yield is going to rip higher on that news. Right now, I guess there's enough people taking shelter on the long end of the yield curve that it's keeping those rates suppressed, even though after 2 days of Fed, it is clear Fed is going higher, Fed is staying there longer. We're now pricing in another 100 basis points of rate hikes from the Federal Reserve right now. And again, shout out to my moderator, Mish, who called this one. The likelihood of a 50 basis point rate hike on March 21st is now at 75%. It was as high as 80% earlier this morning. So Fed going to be tighter, going to stay there longer. Nothing new there. We've been talking about that for a while. Looking over at commodities, we've got gold is up $14 this morning at $18.32, up about 0.8%. Silver's up about 12 cents, 0.61%, trading at $20.26. WTI crude up 88 cents, just over 1% at 77.56. And natural gas finally catching a bid today at $2.61, up 6 cents or 2.6%. I am still in my natural gas trade, folks. Even though we are below the 9-day moving average, we are still above the 20-day exponential moving average. That is my hard sell point. If I see us go below that one, I will be getting out of that. We've been kind of in no man's land here between the two averages for the last couple of days. I'm still keeping an eye on this one. But I am still in the natural gas trade. I know a lot of you guys are curious about that one. Is what it is. All right. Looking over at oil. Oil still in this band between $72 and $82. We've been there really since November. Not a lot happening today in oil, although we did get inventory data over the last couple of days. We had API, that's the private sector, American Petroleum Institute. They came out and said we had burned through 3.8 million barrels of inventory last week. So finally, we got an inventory draw in oil. I've been sounding the alarm bells about some big inventory builds over recent weeks. So we finally got a long overdue drawdown in oil, although that's not a trend yet. So I'm not too worried about that one. Same thing over here in the Energy Information Administration, or the public sector numbers. We saw a 1.7 million barrel burn down in oil inventories this week. So not sure if this trend has reversed yet, but at the very least, we finally got a little bit of inventory draw after weeks and weeks of big builds. All right. But the big story today is going to be the banks, folks. And just looking over at a couple of them, we've got Silvergate Bank is down 38% right now at $3. Again, this one, it's going to zero. Bitcoin not liking this Silvergate story. Right now, it's down about $248, below 22,000, trading at 21,744. We've also got Silicon Valley Bank. I talked about this one, or SVB. Now, this is a big outfit. They are going to sell stock to cope with a cash burn. Startup-focused lender SVB Financial Group is selling assets and has embarked on a $1.75 billion share sale to shore up its balance sheet after cutting the 2023 forecast as rising interest rates weighs down the company and its customers. And there was one point here, shares in the California-based Silicon Valley Bank dropped 30%. SVB loans money to early-stage businesses and says it banked nearly half of U.S. venture-backed technology and life sciences companies with stock market listings in 2022. Its customers' cash burn rose in February and is driving depositors lower than forecast, according to their CEO, combined with higher costs of capital. This is pressuring margins and income. SVB Bank right now is down 35% at 172. And the last one today, Credit Suisse to delay their 2022 annual report after a late call from the SEC. Now, the call from the SEC says that it was related to a technical assessment of previously disclosed revisions to consolidated cash flow statements in the years ended December 31st, 2020 and 2019, as well as related controls. All right, so that's a lot of bank speak. Be honest with you, I don't know what that means. All I know is they're delaying their annual report because of questions about the SEC. Delays in annual reports from GSIB banks, bad. That's all you need to know about this one. I'm not going to say, oh, they're failing, they're going down. But Credit Suisse, bad things happening at Credit Suisse. This bank, when the dust settles from this, if they survive, they are going to be a shadow of their former glory. And Credit Suisse stock this morning is down a paltry 1.55%. All right. And I saw a couple of you guys are here active this morning. Let me find everybody. Hope I didn't miss anyone. Hold on. We're going to find you guys. There we go. What's going on? Mike Bender from Robin RC Models. He says, good morning. Seems Silvergate's biggest issue are the 10-year bonds that lost fair market value thanks to Jay Powell's hike. That's an issue for all banks at the moment. I agree with you. Remember, bond yields going higher, folks. That is bond prices going lower. And what do banks do with your money when you deposit it? Well, they either make loans or they buy treasuries with it. And if they bought treasuries, the value of those treasuries has gone down. So absolutely higher yields is stressing banks. Now, the flip side is banks tend to make their loans at higher interest rates. So they make more net interest income during higher rate environments, but you have to watch those assets on the bank balance sheets. Also, I would mention that the Fed does not directly control the 10-year yield. The Fed controls the short end of the curve. And right now, the short end of the curve is a lot higher than the long end of the curve. So the Fed does not have direct control over that. If enough people go piling into long-dated treasuries for safety, it doesn't matter what the Fed does, those yields are going to go lower. But thank you very much, Mike. I appreciate the support of the channel, sir, and the super chat. As always, you're a gentleman and a scholar. And I think I got everybody. Let me just make sure I got everyone. And I did. All right, guys. So long story short, watch those banks. Watch for contagion. We don't know who's next, if any. Watch those crypto asset sales going on over at Silvergate that could collapse the value of some of those assets if they're illiquid. That's what took down FTX. So keep an eye on that one. I want to say thank you very much to my Patreon supporters. Had a good time talking to you guys yesterday over Zoom. There is a link down below should you feel so inclined. Hi, Mom. Hi, Dad. I love you guys. Thank you to my Blue Wrenches for everything you guys do to keep things neat and tidy in the chat. And until next time, live small and dream big.